Hi, I just want to give you some feedback on the Chapter 2 and 3 questions. Most of them are multiple choice. There was a couple short answer at the end of the list. I'd just like to go over and give you some detail and give you some explanations of some of the questions. First question asks to add a user and password. You would go to Company Menu, and you can see that along the top. Second question asks about the chart of account list. It does contain everything. It contains assets, liabilities, owner's equity, income and expense accounts, owner's contributions. So our answer would be D, all of the above. Number 3, all of the following are expense accounts except for accounts payable. Number 4, what are assets? They are the resources that a company owns with future benefit. The text, for this chapter 2 does give you some explanations of some background. You also did go through this in your accounting class, so if you need a refresher, I would read through those pages again. The income statement, do you remember that? It's the statement that has your income and your expenses, so it does report the results of a company's operations, listing income and expenses for a period of time. Number 6 asks you what is a temporary account. That is your sales account. If you remember, we have some temporary accounts that we use. When you close at the end of your cycle, you roll those into the permanent accounts. So in this case, inventory, accounts receivable, and accounts payable are all permanent. Sales is a temporary account. We will be doing this. QuickBooks has the option to close out, whether you, some companies do it monthly, some companies do it yearly. We will go through that in a later chapter. An example of a non-posting account is your purchase order account. So not every time you put in a transaction does it directly impact things such as your inventory or the amount of money you're going to have. So a purchase order is the intent to make a purchase. It's considered a non-posting account. To add a new account to the chart of accounts, you would go to C from the chart of accounts window, select account and select new. You also can, I think I showed this in the November, right click, and if you right click when you're in chart of accounts, you will see the options, the same thing as the menu options. Non-posting accounts are needed to track information necessary in the accounting information system. I'll give you another example of a non-posting account. If you give an estimate to a customer, it doesn't mean that they are signed on to do business with you, so that is also considered a non-posting account. It is important to keep track of these within QuickBooks. However, you don't want it to affect your numbers because it is, just what I said, an estimate, and it's the initial part can be the initial part of a sales process. Which of the following is considered a permanent account? Land. Do you remember we did talk about all the expenses are rolled in, as well as your sales revenue, and that all gets put into your owner's equity when you do close out the accounts. You can customize QuickBooks to fit your variety of needs by going to Edit and Preferences. We did this on the WIMBA session where I changed the background color. There's a lot of preferences in there, so if you have some time, you do want to take a look at that. All the following are income accounts, except for obviously an expense is not an income account. To sort the chart of accounts by account name, you just click on the name heading bar and it will sort it for you if you want to try that out or if you tried it during your exercises. Short answer questions. What does the company snapshot provide? I showed this on the WIMBA session. It's a really nice tool. It shows you a lot of different information, customers. It shows you, how you're doing, what's owed, maybe things you have to pay. There's a lot of great information in there. Briefly explain the purpose and benefits of using a password. I mentioned for our intents purposes, it really doesn't matter because you're the only one that should be going on and using your version of the software. In a company, though, think about this as like leaving your checkbook open and anyone can come in and make changes or look at this information. So the benefit of it is that you can protect it and you can set up different tiers of who you want to be able to use what information. Certainly a password can help, and I would strongly recommend it within a company for the fact that you want to maintain the integrity of your information. Okay, so chapter 3, let's go over to chapter 3 all the way up. Okay, so let's look at the first question. The check register does record payments and deposits to the checking account. All of the following tasks can be done except for you can reconcile accounts, you can record deposits, you can print checks. You should not be paying employees from your banking section. Let's say that. Can you write out a check to them? Sure. But if you go through the employee section, then it also does all the payroll and that information. So you shouldn't be paying your employees through the banking section. The following icons appear in the banking section of the home page, and you will see write checks. Example of undeposited funds. Well, why would that box pop up that say undeposited funds. So if a customer pays you and you do record it in QuickBooks that the customer has paid you, however, you have not actually deposited their check yet. So it's sitting on someone's, to be deposited folder on their desk. That would show up there. So you would see it, and then once you do make the deposit, you can click off that the funds were actually deposited. Which of the following activities associated with the banking section of the homepage? Enter credit card charges. You can do that. I do want to mention, and I believe the book mentions this, QuickBooks has the ability to accept credit card payments. It is kind of like you get basic QuickBooks, and then you can upgrade and you can integrate and work with credit card information. For our exercises, we will never accept credit card charges. We're just going to keep this extremely simple and just use checks. So you do have the option always to accept cash. You also do have the option to accept credit cards. You would set up QuickBooks a little bit differently when you begin. You would say you're going to accept credit card charges. You can pay an additional fee and have the credit cards validated. There is those options within QuickBooks. So I did want to mention you can do it. However, just to keep things simple for our class work, we are never going to work with credit card charges. The one-step approach, rate checks can be used to pay which of the following? Sales tax, bills entered through the enter bills window, or payroll checks. We don't recommend you use any of these, just to write checks. Write checks would be something such as if you just want to really quickly pay a utility bill. When we say bills entered through the enter bills window, once you enter it in the bills window, then you have to pay it through that same process. You wouldn't want to write a check out for it. Which of the following statements is true? It's to maintain more consistent records. It's best that the owner maintains a separate personal checking account, but both the owner's personal checking and business accounts are listed in the chart of accounts. So we did mention in accounting it's best to keep those two separate. When deleting a check, all of the following is true except it's better to delete the check than void a check in order to erase all records of the transaction. Here in our classroom exercises, it is okay to delete a check if you're trying to fix your work. However, I do want to strongly suggest that when you're doing an actual live company, it's best to never delete checks. The reason why is because you do want to maintain the integrity of your... So what I'm saying is if something happens in a business, you want to have, you want to be able to check and see exactly what happened. So it's okay to write out a check and then not need it. I do it all the time. You write big letters across it, void, and that's okay. It's not a bad thing to void out checks if you do make a mistake, but you don't want to be in a process where you're deleting things, because then the money's there, the money's gone. If you're deleting a check, it can really kind of mess up the numbers for you. And like I said, you want to maintain the integrity of your information. So to do that, keep that track and that trail. So you can put void and then put in the comment section exactly what happened to explain it. When reconciling a bank account, which of the following is considered a timing difference, meaning the difference between the bank balance and a book balance? And that's outstanding checks. So if you pay someone a check, they don't necessarily have to go right away to deposit it. So it's not going to show up when you may have put it in your system that you've paid this check out. It may now show up in the bank statement because the person hasn't deposited it yet. When reconciling the bank books using QuickBooks, you do want to add interest earned if it is there. I think in our examples we haven't had that yet. All deposit lists in the bank statement are selected as cleared in the reconcile window, and service charges are subtracted. So you do want to make sure if there's any interest, you do add it. If there's any service charge, you do subtract it, and you do make sure you go through all the deposits. When the balance of an asset account like checking increases, it means the account is debited. I did mention that QuickBooks is an awesome software because it puts the debits and credits for you. We do need to have some accounting background to know, what's a debit, what's a credit, what should be working, so we can make sure that we're putting things in the right places. When the balance of an equity account like capital stock increases, it means that the account has been credited. Keep in mind if you have your assets equal your liabilities plus owner's equity, and your debits and credits are different based on what type of category it is. So, and that does bring you back into your basic accounting information. Time difference is discovered when reconciling a bank statement that the bank has not, deposits in transit and outstanding checks. So if you say, well, I did write out this check, or I did make this deposit, and you don't see it on your bank statement, it just hasn't cleared yet, and that's okay, and that's why you may have more in your system than what your bank statement has. The drill down feature and how it helps, it does allow you to see an item in closer detail, and it shows supporting data. It is nice, the drill down feature. So if you're in, let's say, the general journal, you can double click on it. It brings you right into that transaction, and then you can see it, or possibly if you need to make changes to it. 4 types of bills that should not be paid using the one-step approach. Payroll, paychecks, sales tax, any bills you enter. You do want to go through the proper channels to do those. Otherwise, if you're just writing out checks, it might seem like a real quick, easier way of doing it. However, you are still going to show that you owe it, such as you still owe the sales tax in a different screen. You still owe the bills, but then you might have paid them, and if the two don't sync up together, then it's going to throw your numbers off. So something we'll look at as we continue to move forward when we get into those sections. So hope this review helped you. If you have any questions on any of the information, I certainly am open to discussing any of it further with you.